One of the most important retirement decisions you'll ever make is what financial professional will you choose to guide you through retirement. My name is Herr, and money is only important to the extent it allows you to live the life you want. It's critical to pick an advisor that understands the factors that will impact your ability to retire successfully. In this video, I'm going to cover the 3 most important factors that you'll face in generating income during retirement: deposits and withdrawals, asset allocation, and the sequence of returns. First, let's talk about retirement success. A common perception is that once we retire, we won't have to worry about retirement funds or our income level for the duration of our retirement years. Let me demonstrate. Let's say at the beginning of your retirement, your investment capital is represented by the green dot. What is important to you in retirement? Having an income that increases with inflation so that you can maintain your standard of living, as represented by the blue line. Many of us are conditioned to believe that our beginning capital will grow over the life of our retirement, which is the green line. In other words, your capital might grow even as you withdraw funds. Another scenario might be that you have original balance retention, which means when you die, you still have your original balance and you received inflation-adjusted income over your lifetime. The final scenario, which we will call the primary level of retirement success, this is what we hope to at least achieve. You had all the income you needed while in retirement, but essentially you died just in time, just before you ran out of money. Anywhere between these points is retirement success. Why? Because you achieved the income you needed during retirement. The most important line on the graph is the blue line. The range and where we might end up is completely unpredictable. There are several factors that will influence your financial future: deposits and withdrawals, or your cash flow; asset allocation, in other words, how are you investing your money among stocks, bonds, and cash; finally, an unpredictable sequence of returns. For any investment, all we know is how the investment performed in the past, which is a lot like looking in a rear-view mirror. The future is unknown and unpredictable. These 3 factors come together to affect each client's outcome differently. Unfortunately, our retirement date is often determined by our birth date. Let's take a look at the S&P 500 to see how 7 different retirees investing in the same investment had different outcomes, simply based on the date on which they retired. As you can see, each investor had a different outcome. While some investors are happy, other investors lost money. It's important that you work with an advisor that understands how to control the interplay of these 3 factors impacting your retirement: deposits and withdrawals, asset allocation, and the sequence of return. More importantly, because we are financial planners, we will also address many of the other important items impacting your retirement, such as tax, estate planning, your wills and trust, as well as the long-term care considerations. We will make sure you have the information you need and the education advice to have the highest probability of success. We invite you to contact us for your complimentary initial consultation and to sign up for our Financial Seeds email newsletter. We look forward to helping you live a life of prosperity.